So, good evening. Oops, I got the wrong screen up here. This is what we want. How's everybody doing tonight? Okay, after a big, huge day on Friday, we opened positive, but we traded back to the lower end of the range today. So even though we were up, whatever it was, 140 points, it was down here at the lower end of the range. But that gives us two things to look at. One, it's a bull Harami. And two, it's an inverted hammer signal. So that makes it relatively simple to know what to do tomorrow. If they open the market positive, remember the inverted hammer probabilities. It's probably going to be a move to the upside based upon a positive open. That same scenario can be applied to the S&P 500, bullish Harami, inverted hammer. The Stochastic's not quite in the oversold area yet, which means we might have a couple of days of waffling, even if it's trading slightly positive, given the Stochastic's time to get to the oversold area. Yeah, the Harami itself is the body. The open and the close inside the previous day's open and the close. Hold on for a second. I've got to figure out how to get rid of that. I think I did it. Okay. Hang it. Where does that come from? I can't figure out how to get rid of that thing. I don't know why. Yep. I give it. Yeah, so the Harami is the actual open and close inside the previous day's candle. But it's also a Harami inverted hammer. If the tail was to the downside, it would be a Harami hammer. If it was a doji, it would be a Harami doji. So it can be more than one. Make it a plain pointer under setting. I don't know where that is. And I get pointer tools. Maybe that was it. All right. We'll see how that went. So, because we have an inverted hammer, we got the bang, Jiminy Christmas. How does it keep coming back? Under cursors. I don't know where to find the cursors on here. Pointer tools. Cursors out. That didn't do it. None. Well, if that doesn't make you want to kick your grandmother, that just, after hours, is it a positive open? No, it's on the open tomorrow. Because remember, that's what these charts are illustrating. And we don't want to kind of preempt what might be happening. What are the let's see, right now the YMs for the Dow are up 33 points. But we can't rely on that because by tomorrow at 9:25 they may be down 80 points. So it doesn't matter what they're doing right now. Now here's the strongest of all the charts, is the NASDAQ. You can see what the trajectory has been, whereas the Dow has been in this direction. The NASDAQ has been relatively flat, and notice what it did today. Unlike the S&P 500 and the NASDAQ, this actually closed back up above the T-line. Now, obviously, that's being helped out by some of the biggies, like Netflix, or that one's just stronger than bear's breath, Tesla. And so here's why you do what I say and not as I do. Because I knew right here you could buy the calls and stay with it as long as it stayed above the T-line, not ever expecting that type of move. I mean, we'd be ready to retire if we just bought a couple $1,000s worth of calls back here. I hate to even think of that. Jay, remember, anybody can put out an estimate. Now, I think the latest estimate, somebody had moved up to 800. Remember, when it was at this level, they were estimating 860. That's right. Yeah, I guess you should never say anything's crazy. And I'll digress a little bit. When I was a stockbroker with Kidder Peabody, Oppenheimer and Cowan Company in Houston, Texas, back in the late 70s, early 80s, for 8 years, the Dow went from 750. Now, that wasn't 7,500. That was 750. It'd go up to 1,000, go back down to 750, go back up to 1,000, and every time it got up to 1,000, gravelly voiced Joseph Granville would say, "Short the market. It's going back to 500." And the market would back off again. After 8 years of that fun, I got out of the business. But while I was in the business, somebody said, yeah, in a few years, it could be at 3,500. And we're thinking, what is this guy smoking? 3,500? He was having a hard time getting above 1,000. Now look where we are. Okay. So why do you wait to see how a price opens? Because this was setting up nicely today, or on Friday. It had opened positive. That story never gets old. I try to tell it at least once every 6 months, just in case people forget it. But notice how it opened down here. Told you to stay out of that position. On the other hand, we recommended TRHC because if it was trading positive, it'd be breaking out, which it did today. Kind of the same thing that why we recommended PRPL a few days back. Because if it was breaking out, it was going into the next wave. Yeah, Joseph Granville was still saying to stay short, but at 3,500, he decided that they were in a bull market, that you should probably cover your short positions. So that is another reason why you never listen to what somebody says. Let the market tell you what the market's doing. That's the true indicator of what's going on. Another one that we're going to reiterate, I'll probably reiterate this as a buy tonight, is SPCE. Observe the obvious. They could never get this to close back below the T line. Now you look like a wave 1, wave 2, going into wave 3. And the same scenario for Twilio. Wave 1, wave 2, kind of a belt hold, bobble breakout going into wave 3. Now another thing that I was pointing out in the afternoon newsletter today was the ones or the stocks that didn't close below the T line on Friday showed kind of a relative strength without even having to have a relative strength index on your chart. The simple rule that as things stayed above the T line, you could stay long. CVM, another one that could probably be reiterated as a buy on a positive open tomorrow. And we're waiting for NK to finally get out of the chute here. There's still this wedge looking for it to move to the upside, which is basically kind of the same scenario as SPCE. You can see kind of the wedge formation right here that it broke out to the upside. I don't know, what is also square. Well, square just staying above the T line, yep. Now we're still short stocks, even in, because the market doesn't know which way to go. Once MBOT did the doji sandwich, we were waiting to see whether it was going to hold here at the 50, which it didn't, just stays short. At this point in the oversold area, we'll put our safety stop right here at today's open. We recommended Beyond Bread as a short, kind of a doji sandwich. Expectation of coming back down here to the 58-day moving average. Luckin, there's your left-right combo. It definitely told you to be out. Now, remember we kind of illustrated this scenario right here. You saw a positive day with stochastics heading down, but notice what type of signal that is. That's a non-signal. All that is an up move and a downtrend. I think they call that the in-neck move. And if it closed right here, it would have been the at-neck pattern. But a very simple entry. If it had opened positive, it was going positive. If it opened lower and started trading lower, they were still failing at the T line. You could stay short. Let's see. That was okay. Crocs. You can still see the dumpling top in effect. And what are we looking for? That big breakdown where they start crunching it. Now, people say, well, aren't you getting into the oversold area? Remember, just like a fry pan bottom, where does the fry pan bottom break out? Usually when stochastics are up in the overbought area. Where does the dumpling top usually break down? When the stochastics are down in the oversold area. We're watching Cuervo because of the bearish belt hold. So it didn't execute today. But that doesn't leave it out of the question that if it came back down through Friday's close, start shorting it because that strong sell pressure is still in effect. Now we closed out the calls on DX today. I'm sorry, DXC. Because it came back up through the high of the spinning top in the oversold area. However, you can see this one still has this kind of dumpling top. If it starts trading lower, we'll probably re-short it with the prospect of a dumpling top breakdown. There's still a little gap right here, and then down here would be the next likely target. And Cree set up, or let's say set up, traded up today. So observe the obvious. You got where they can't take it down. You're getting in toward the oversold area. You had a left-right combo right about the same level, and you're right here at the 50. If you were short, you probably should have covered your short position today. Now, if it started trading lower, yeah, you could think about re-shorting it, but the probabilities are starting to go against you based upon stochastics getting toward the oversold area. You can see how you've got a tweezer bottom, these two, and close right on the 50. If it opens positive tomorrow, where do you think the next bounce is going to take you? Back up to the T-line. So you're losing probabilities right now on this one. And that's why we want to kind of be a preemptive analysis of the visuals of the signal, the strength, where it was occurring. And where did the buy-in occur before? When you start adding that all up together, you got to say, well, is this the best place to be short right now? Okay, what else I got here? The biggies. I call Uber one of the biggies because it's broken out of this wedge. I keep an eye on this one. Now, obviously, Tesla, I have no idea where that's going to go. If you were long, if anybody was lucky enough to be long somewhere on some calls, you just hang on to it. Jason, are you in it? Good for you. You will be buying dinner for everybody for months. You were in at 586.20. All right. Okay, Baidu, another one. Doji gap up. In the stock as well. Rama, you're going to be buying lunch for everybody for years to come. But there's your best friend. Gap up. That one's got strong prospects. Netflix. We did. But you can see the little wedge formation and the additional confirmation they couldn't close this below the T-line. Now, Amazon backed off late in the day. So if this starts trading lower, that means the profit taking is still happening ever since here. You might take some off, but I would still suspect you're going to be in a 45-degree. And Apple is a good indication that when you hold a position, you can stay long until you see a sell signal and a close below the T-line. Even though it tried to come back up. Remember, when you start getting that first, nick in the armor, that's not the right word. That's when you start and get showing selling. And again, selling. So you should be out of Apple right now. And NVIDIA, nothing there. Wouldn't know whether to stay long or stay short, or go long and stay short. So this is a nothing chart right now. Chink, thank you, Ray. I couldn't think of the right word. All right, Morningstar signal on PGNA with the added credibility that look where the hammer signal hit, right smack dab off the 50. Oh, there it is. Okay, I thought maybe you weren't seeing that yellow box. I have to figure out how to. So this one becomes a good one with the idea that the trend is heading back up. IQ scenario, best friend gap up. LABA, another one that closed just above the T line after a best friend signal. Look for this one to have the capability of coming back up into the trend. Oh, JP, it doesn't matter what the weekly is indicating. Yeah, it's still above there, which doesn't help you. Oh, now I'm really goofed up. On the daily, until they can get it back up above the T line. Right now, with stochastics heading down, it's producing a little bit more of indication that they may be waffling around down here until the stochastics can get to the oversold area. NKTR, another gap up. Right here at the 50, a positive open. Probably gives you a good target heading back up toward the 200-day moving average. CTVA, there's your doji sandwich, kind of breaking this downtrend. That's another one that would likely come back up into this trend channel, trend trajectory. HIMX, that's a good-looking chart too. Left-right combo, doji sandwich breakout. You can be buying this one. Kiva, kind of a wedge breakout. Another one that's probably got another leg up. Nike gapped up but did a doji. So what would be the game plan on this one? Anybody? See how it opens? Right? Doji rule. Not a doji sandwich. There you go, Kenneth. Bullish flutter kicker, which means if this opens positive tomorrow, you've got not only the prospect of it going positive, but you've got the prospect of a bullish flutter kicker telling you that you've got a strong uptrend starting. Yes, so put this on your watch list, especially even if you're day trading, kind of expect a high probability of a positive move and a substantial positive move. Same scenario on UBX. If it opens positive tomorrow, bullish doji sandwich. And Miller, I think this is Miller Furniture. Same scenario. This opens positive. Bullish doji sandwich. So there's three that have setups with flutter kickers, but blue has a setup for a kicker signal. Where would you expect the next target to be? Back up here. And if it's out here somewhere, it might be corresponding with coming up to get to the 200-day moving average. Bullish engulfing signal on Bloom Energy. Another one you can buy because bullish engulfing closing above the T-line, bouncing off the 200-day moving average. Wave 1, wave 2, going into wave 3. Big bullish engulfing on SAIA. If you like playing these, you buy on positive trading, expecting that kind of a belt hold bullish engulfing, which is the same thing. Whoops, not the same thing here. But here's one that's got a very good chart where you had kind of a Morningstar type signal. Now trading positive, at least coming back up to test the moving averages. But SXC, here's kind of your belt hold type signal. Another one that you'd suspect going to the 200-day moving average. And there's kind of your J-hook type pattern on CGEN. Anticipate more upside on this one. Whoops, it must be at all-time highs for quite a while anyways. And we'll probably be reiterating a buy on RVNC. There's your little gap up doji. Kind of a J-hook pattern. If it breaks out through this level, more upside. So we've got positions on the short side. We're looking for things like this where they really break down, like ON. And a lot of the oils right now are rolling over. This one looks like a bearish J-hook pattern setting up. So the fact that they closed it below this area tells you there's a prospect for wave 3 to take you down another 25%. Pump, another one, has that same prospect. It looks like, try this one. Crude oil oops, I was thinking of what I was thinking. Right back down to the $50 a barrel level. I guess while we're here, we should check out gold, slow uptrend, soybeans. There we go. Soybeans trying to find a bottom. And I've been trading wheat today. It came down and actually hit the 50, so it's trading right in here right now. All right, I think that's about all I got for tonight. What was let's see, a couple that I've put highlights. I think IQ can be bought on positive trading. And we'll probably be going or reiterating a buy on space because of this J-hook pattern. And on the short side, if you didn't position yourself, there's a gap right here, at least getting you in the right direction. But I would suspect they could be taking this all the way back down to the possibly the 50. and Crocs. At some point, they might start breaking this one down pretty quick. Okay, I guess that's about all I got. Are there any general questions? No, I wasn't trading hogs. I closed out hogs with a good profit. Oh, I didn't even look at them, did I? I closed out hogs the other day right in here because we were getting into the oversold area and we'd started to move away from the T-line. But you can see how this was working effectively. It was rolling over, gapping down, and bam, that's where you make your big move. Pushing Kentucky Fried. Oh, is that what was happening? Yes, and you only need a couple of those to really make for. You've been knocked off, Tom. Have you been going up to Tom? Have you been going up to the right of the screen? Oh, you've been getting knocked off for some reason. That's got to be your server, imagine. Okay, I guess with that, Jim, go ahead and do the double line. And then 3.7 seconds, do the next double line. All right. EMN, you can get ready to buy this, but I've watched the 200 because that's kind of correlating with your downtrend. Synopsis, if you were short, get ready to cover this short if it opens positive. If it opens positive, you can think about going long. But you definitely need to see bullish confirmation. You could consider, well, nah, not so much a fry pan bottom as it was just a big signal, a bobble, and there's your bobble breakout. That's a good looking chart. And CVNA, a Morningstar signal, trying to break out through this level so you can buy in positive trading, then watch to see what it does once you get up to the 200-day, the 50-day moving average. Stay long on this one. So when you had that big price move, let's make this bigger. Had it opened lower and traded lower, I would have closed it out and wait for it to come up. But now you can see what's happening. You're in a 45 degree. So you stay long as it stays above the T-line. ADMN, you can buy this one out of a fry pan bottom, but that little doji gap up today told you there was strength coming back in. MITK, I think backed off today. Yeah, right here to the 200. If you're long, it has to open positive and trade positive to stay in it. If it opens lower, close it out because it means you've got a crummy looking chart at that point. Bullish engulfing right here on the 200 on APPS. Another one you can be buying. Just watch to see what it does once it gets to the T-line. But then turn down and close down for the day. If you bought today, would you have stuck with it or dumped it, and why? Oh, okay, John, I didn't read far enough. I would have probably stuck with it because it's supported on the resistance level, now to see if it acts as support. And even if you haven't bought it yet, if it starts trading positive and moves up, you can be buying it fairly aggressively because what's it essentially telling you as far as what everybody else is watching? You failed, you pulled back, you broke through, you pulled back to see if it was going to act as support. If it starts trading positive, everybody says, it's supporting, let's get in it. That's where you want to start going after it pretty aggressively. Twilio, still looking for wave 1, wave 2, wave 3 being the same as wave 1. Stay with this one. And PCG had kind of a fry pan bottom. No, it didn't. Gap up. What was I looking at? Something else. You stay long, but what's your warning right now? The gap up in the overbought area. Put your safety stop right here. It shouldn't come back below today's open. And that's what the gap up is alerting you to. Rite Aid, a little bullish left-right combo. You can start buying this one if it opens positive and starts trading positive from here. Pin interest, a bullish Harami. You're kind of a little resistance, kind of a wedge. You can start buying this one if it breaks out through this little resistance level. PFPT. Oh boy, you've got a lot of support right here. If it, boy, I probably wouldn't short it unless it came down through these moving averages. You do have good selling. Bearish left-right combo after indecisive trading. Yeah, you probably could be going short on this one on any weakness. Collegium, Morningstar signal. You buy if it gets up on positive trading, especially through the moving averages. Weight Watchers did a bullish left or bullish engulfing, bullish confirmation. You're sitting right smack dab now on the T line. If it opens positive, figure they're at least coming back up to the 50-day moving average. Peloton, you can stay long on this one. And you got to figure, at least they've got a good marketing group, because to put out the controversy of a guy buying his wife Peloton was whatever sexist. That was the best free marketing program you could think of. Whoops. Small caps. Russell, bullish Harami. What did the Russell do today? Bullish Harami, yep. So, same scenario as the other indexes. Definitely want to see them open positive and trade positive tomorrow. EXAS, stay long. Gap to fill, which means at least the 200-day moving average becomes a viable target. PXD, stay short. Wouldn't necessarily, you could short it here, but yeah, I wouldn't be afraid to short it here on weakness. Shopify. It has to open positive. You can see how the colors are changing. And then you had a bearish engulfing signal. You've had a close below the T line. If they open it lower and you're long, you close it out, because that's telling you they're starting to show weakness up here. And AKRX. Nice fry pan bottom. Just make sure your volume is hefty. Yeah, I think we did Baba. Baba, you can be buying on positive trading. Macy's is still in a downtrend. It did a bullish Harami. If you were short, you get ready to cover it, especially if it opens positive, and then really especially if it comes up through yesterday's or today's high, which is above the T line. Oh boy, I don't look at so much at MACD. Let me do this. Oops, let's see. MACD is over on this one. CROX. Nothing right now. Remember, just because MACD is down big doesn't mean it's about ready to reverse. It's just telling you that it's down big. So, yeah, MACD is a lagging indicator. I have it on some of my charts only because I can put a histogram on the line chart of the stochastics. I don't use it. It's just one of those fluffy things that you can have extra. So it doesn't really mean anything to have MACD. MACD heading down. MACD becomes relevant when it starts moving up and it crosses the center line and starts going positive. That's where MACD becomes a viable indicator. Uh-oh. Well. Hitting everything except what I'm supposed to be hitting here. Stay short. It didn't hold the 50. You're still heading down. You're in the oversold area, so your safety stops at today's open. Zoom. Big breakout. There's your kind of your J-hook slow curve breakout. If there is a 200 on here, I don't see it. Look, I've got the 200 over here. But that's probably where your next target is. Agilent, stay short. Work. If I was short, I'd have covered the short. You can see the buying is going on, but I wouldn't be a buyer just yet. Not until they can get up above the T line. And AXSM, this one you can start thinking about buying because it came up above the T line. ENPH, if you closed it out here or here, you can see that it's still staying up above the T line. If you stayed with it, you continue to stay with it. That would have been a hard one to stay with, though. Well. I'm the type that doesn't like to make the same mistake 7 times. Nothing on this one. Big lots, just no real great direction right now. EHR. Nothing. I would have closed it out on Friday. Because remember, even though it's not a sell signal, you were up in the overbought area and came back down through that, especially with the market selling off. I would have closed it out, especially if I had a pretty good profit in it, riding it up that far. I wouldn't get back in it until they can prove they can get it back up above the T line. P10, another one that if you were short, you're starting to see buy signals. If you didn't close out your short position, you get ready to on positive trading, but you don't go long until you get it confirmed above the T line. This Ironwood, That one you can get ready to buy. I'd probably be more apt to buy it above the 50, breaking this downtrending level. And Bison, bullish engulfing, another one you can get ready to buy with the anticipation at least they're going to bring it back up to the 50-day moving average. Not out on Friday. Oh, question mark? Yeah, if you had been in it and it ran up here that fast, and it came back down here and didn't hold the T-line, yeah, maybe you come out of it. And so your next criteria would have been if it came back down through the low of that doji, you would have been out of it. If you held on to it, though, supporting at the 200, now you wait to see if they can open this positive tomorrow. We did Zoom, Coop. Oh, boy. If you're short, you stay short. You use the T-line as your stop. Okay, that's why it's moving up, okay? Jason, if you are in Tesla, how long do you manage when to take profits with such huge swings? T-line is over. Well, one thing that you don't want to do is change your trading strategy because of different price moves. I can't imagine that you don't have huge profits in this one, Jason. Are you in the? Did you say you were in the stock, or are you in the calls? So just to pacify myself, if I had been lucky enough to been in this, with it moving up that big in an overbought condition, and I had huge profits, I would have probably taken at least half the position off. Now I can at least rationalize that it's starting to move away from the T-line in the overbought condition. It could go higher, but now I'm in a high risk trade trend away from the T-line, but with a much smaller position. Uber came back up through this little resistance level. You could start looking to buy this one on kind of a wedge pattern breakout. And Billy, same scenario. Notice how it broke this downtrend with a Morningstar signal. Be ready to buy this one. And ONCY, nothing yet. Not until they get up above the T-line. Make sure you've got a lot of volume on this one. AKRS, for some reason, that one's not coming up. And Ballard, get ready to buy if this breaks that downtrend. CHTR, expect this move to be at least greater. Well, I shouldn't say that. Notice what it's done. Uptrend, 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 consolidation, right back to the support, and bam, they took it right back up to the trend. You watch for these type of situations because this is usually gives you a quick pop to get back into the trend. I would just stay long. On Crocs, remember what happens in a pattern. You're going to be in the oversold area when they break it down, just like a fry pan bottom. When it comes back up to the beginning of the pattern, usually you're in the overbought condition. Western Digital wouldn't be long or short, no direction. ABKA. AKEA. Oh boy, not a clean reversal, which means I would probably be going someplace else that has a strong buy signal. It's probably going to move up, but it doesn't have the same probabilities as if there had been a reversal signal today. OMC, oh boy, that would have been a toughie to stay in if you had been short. But if you are short, definitely want to see it open lower and trade lower tomorrow. Oops, I got a Peloton commercial on right now. The problem with those commercials is usually the people they have demonstrating them don't need a Peloton. PTLA. You can buy it. The maybe coming back up there. So you can buy on positive trading and use the T-line as your stop. Bank of America, nothing there. It wouldn't be long or short this one. If you're short, because it hasn't closed above the T-line, stay short and use the T-line as your stop. Would you have to see EHR for a sell signal lower than today? I don't know. What did I say? You have to see. I probably, if I'd been long, I would have probably closed it out. I would have closed out on the basis that being up in the overbought area, when it came back down through the open of this candle and you saw the market selling off, I would have stopped out right here. Even though it didn't do a sell signal, it just wasn't going to be pretty in the overbought area coming back through the previous day's open and eventually closing below the T-line. So there's going to be times when you kind of decide, I better take profits because this is strong selling, which should not be going on in an uptrend. Because the worst case scenario would be, all right, once the selling is over, because there wasn't a true sell signal, you start looking for another buy signal to get back into the position. And that's going to be subjective. I see nothing. Wouldn't be long or short. Good for you, Jason. If I see something that is too far away from the T-line on the daily chart, so if I'm up here, in this case I apparently spiked up there, then I'll flip to, when I see that it's too far away from the T-line too fast, then I'll flip to the 10-minute chart and watch what it does. So I flip to the 10-minute chart. The Dow futures are up another 110. Yep, 117. All right. Yeah, so once you start moving too far away from the T-line, that's when you pull out your 10-minute chart, especially in this case it wasn't, especially if you're in an overbought condition. The gray line is probably the 34 exponential moving average. It works relatively well. But your main ones are the 50, the 200 simple moving averages, and the T-line, which is your black one, the 8 exponential. S-fix, if it breaks out through the 50 and the 200, yeah, which would also be breaking out through this downtrending channel. AKRX, nice fry pan bottom. Yeah, that, and again, that one needs to have hefty volume. And LRCX, nothing. Which direction is this going? You've been in an uptrend. You had a left-right combo and a close below the T-line. Once they do that, that's usually the indication that this is the area the bears are coming in. So even though they move it back up, you still have to be a little bit on guard to see whether they bring it back down. Once you see that first break, that's usually telling you there's selling starting up here. Be a little bit more conscious of any further selling. ATUS, another one that's having trouble getting up through the T-line. So it still can be bought, though, if it comes back down. If it opens positive, back up into today's trading. And Weight Watchers, get ready to buy this if it opens positive, with the first target being the 50-day moving average. Okay, so if they open this up 110, I'm sure that would mean Art, I don't understand the question. Your 10-minute chart you refer to is a day. Yeah, it's an intraday chart. So if this is the daily chart on the Dow, this was the intraday chart, the 10-minute chart on that daily chart. GGG. This would have been another one that I would have closed out, because notice when it gapped up, it didn't really confirm. And then after bouncing off the T-line, the fact that they closed it below the T-line told you two things. First of all, obviously, it doesn't matter. Whoops, I answered. Let me finish this. Reading and answering all sorts of questions. The fact that they brought it back down through the T-line told you be out of it, number one. And number two, after they gapped it up, look where they closed it. Back into the trading range. So that tells you there isn't a lot of power there. 1 day, 10 minute, 2 days, 10 minute, it doesn't matter. Whatever time frame you're looking at. PayPal. Yes. PayPal doing a stick sandwich. Let me see if I need to come right back. And Alta, nothing great here yet, but it could be doing a bullish flutter kicker type signal. Good to have you back, Tom. Yeah, stick sandwich is a bullish signal. A big up day, a big down day, then followed by a big up day. So this one, Alta, if it opens lower and trades lower, get out of it because it's not going anywhere. If it opens positive, you've got the prospects of a bullish flutter kicker. And BCRX, not a great chart. Yeah, you need to see something more. I think there is, yes. Should be. What do we got scheduled? I didn't even write on my new calendar yet. What did we do? PayPal. So if this is what we want to see what's going on, this is today's 10-minute chart. It's opened here and came up, I think. And then this is it's a little bit long, but it isn't. So this is how the first 10 minutes traded today, and then what it did for the rest of the day. You see it more on the bullish side, but I think it also is on the bearish side. So there's your stick sandwich. Big up day, down day, big up day, which implies they've knocked a lot of the sellers out of the way. The bulls are going to be in control. What makes it bullish or bearish? Usually two bullish candles versus a bearish candle, bullish candle, bearish candle. What makes it bullish or bearish? That's just what investor sentiment does, if that's what you're asking. All right. Okay, everybody, we will call it a night. We'll see everybody bright and early tomorrow morning. We'll see you then.